Good evening, ladies and gentlemen. You're watching the evening news with me, Sumita Karir, on News Now. And of course, the breaking news that's just coming in is about the Indian economy. Well, Indian economy has retained its growth momentum in the opening quarter, that is the April to July quarter of the current financial year. The Department of Economic Affairs has said in its monthly economic review that was released today, earlier in the day. In fact, the report highlights that India's key economic indicators, they present a positive outlook underpinned by robust domestic activity, improving external trade, exports, growing tax receipts and growing capital flows. Let's go across to my colleague Prakash Pridashi, who's joining us with more information and more highlights of that report. Prakash, take us through the key highlights of that monthly economic review that the Finance Ministry has presented. And then, of course, we'll be joined by our guest this evening.
The Finance Ministry's monthly economic survey has mentioned a lot of important factors related to the Indian economy. If you look at the positive indicators of the Indian economy during month of July, the report says that the India's economic momentum remains intact. Despite erratic monsoon, reservoirs have been replenished. In fact, manufacturing and services sectors are expanding. Tax collections, especially GST collections, are growing with a rapid pace, and so is bank credit. Inflation is moderating, which is a very significant development coming in a given circumstances. Exports of both goods and services are doing better than they did last year. There is a positive sentiment in the stock market. Stock markets are holding on to their levels. Foreign direct investment is looking up, and gross inflows are rising. When it comes to forex reserves, which has reached at a historical level of $675 billion, which is sufficient to cover 11.6 months of imports. So these are the positive development, positive indicators of the Indian economy during month of July. But yes, there are some challenges as well, as the report has taken reference from the RBI's surveys, especially RBI's consumer confidence survey, industrial outlook survey, and household survey as well. And it has mentioned that the both consumer survey and industrial surveys need to be monitored very carefully for future trends.
All right, thank you very much, Prakash, for joining us and giving all of those details as far as the state of the economy is concerned. And of course, now let's get in expert comments from Devendra Pant, who's the chief economist at India Ratings. Thank you very much, sir, for joining us to give us your perspective. Now, first things first, I want to ask you a very basic question on how do you really assess the report that's coming out? Of course, you know, the Indian government has spoken about a lot of parameters that really reflect the state of the economy. What is your overall sense of where we are headed as an economy?
Thanks for having me on the show. The economy, if you look at, there are giving at times the conflicting signals. If I just look at the IIP number, that doesn't instill much confidence. But if you look at your GST collection numbers, which is nothing but the taxes collected on the goods and services you and I consume. Now, if I look at that number, that gives you a hope that when you are looking at continuously 10 to 11% or between 10 to 12% kind of growth month after month, or if I look at the YTD basis, that gives a confidence that the consumption demand is there. Now, is it that strong that it will take us to somewhere around 8% kind of GDP growth? The answer is unlikely. But the growth is there. Now, the question comes whether the growth will be, how the growth will be panning out, whether it will be the skewed for a particular sector. Will it be skewed in favor of the goods or services consumed by the upper end of the society? Or will it be will be distributed across the different income groups? If I look at some of the FMCG companies' first quarter results, now till last quarter or the fourth quarter of last year, most of the FMCG companies were very bearish on the rural growth or rural consumption demand. But if you look at the first quarter results, they are now saying that the rural consumption demand has started, but now they are worrying about the urban consumption demand. So you have on one hand, if you say the Bharat is improving and India is, they are worried about now. Why the rural consumption is growing?
Right.
Because we had seen that the kind of monsoon impact which is
Right.
expected to give a bountiful agriculture production.
Absolutely, absolutely, Mr. Pant, and we'll have to see whether rural India can really hold on to these kind of gains on account of, fairly good monsoon, and this is what also the report mentions as well. But let me draw your attention to one very, very important point that the report mentions, and that is about the quarterly urban unemployment rate. In fact, the report states that it has remained stable at 6.6% in Q1 of FY25 versus Q1 of FY24. But the report also states the RBI Consumer Confidence Survey and how that paints a sobering picture of urban consumers' perception of employment conditions. So is government's optimism justified on this? And how do you really read these, two sets of conflicting data?
Look, Sumita, you have to be very careful in interpreting this data. Now, if I look at the unemployment, so is it people are gainfully employed, are they underemployed, or are they just employed? Now, it may be because if these numbers are coming from government's own PLFS survey, and I don't have any reason to or any strong point or counter view like they are incorrect. I take it government numbers as given number and work on the basis of that. Now, if I superimpose that number on the consumption, the RBI surveys. Now, if RBI surveys are showing the consumption demand or the weakness in assessment, this means despite being employed, it may be the kind of growth or kind of income generation an individual basis on their skill and education is expected to have the kind of the income generation is lower than that. Now, if that happens, and more so, it is everybody's assessment how we are looking in the future. Your assessment, my assessment, and the assessment of any individual on the street will vary depending
Okay.
upon the kind of information we have.
Okay. Okay, Mr. Pant, considering that we are running absolutely short of time, I have to ask you two quick questions before we let you go. And the number one question that I want to, of course, ask you is about inflation. Of course, the report states that consumer price inflation dropped to 3.5%. But don't you think, and of course, we've spoken to other economists as well who say that this was, of course, a result of base effect kicking in. The report also states that food inflation is moderating, but experts are also stating that there are upside risks as far as inflation trajectory is concerned. Your thoughts?
Yeah, you're right. The base effect is playing its role. Come October or so, the inflation will again start trending upward. RBI's own assessment is third quarter and fourth quarter going beyond 4 and touching somewhere around 4.5. Food is still a concern. We had the wheat export ban, atta export ban, everything, but the wheat prices are not coming down in the economy. And precisely that is the reason that RBI is very careful about taking any future monetary policy action now until unless they say the inflation staying around 4% for a slightly longer time.
Yes. Yes, Mr. Pant, and this is also what the RBI stated, that we have to be cautious as far as the food inflation trajectory is concerned. We cannot keep our eye off the ball just as yet. But one final question before we let you go. The report also mentions that the projection of real GDP growth of 6.5 to 7% for FY25 seems appropriate. But what are the immediate challenges that you see as far as that growth is concerned? And do you see that growth getting derailed if inflation is not really contained?
Look, our assessment is growth is going to be higher than 7% in this fiscal year. And what you look at those numbers suggest that then 8.2 to 6.5 or 7 is a sharp decline. So basically what the kind of wedge between GVA and GDP which we had seen, and looking at a situation when you have the monsoon doing well, you have the inflation coming down compared this year compared to the previous year. To our opinion, the 6.5 to 7 is underestimated unless there is some major upheaval or major event taking place in the domestic or the global world, which will pull down growth to around between 6.5 and 7.
Right. Right, Mr. Pant, thank you very much for joining us and sharing your thoughts